Hope you are doing great at your place. You are safe, healthy and strong. Today we are going to discuss about the schedule C. What this schedule C is all about. It is about the sole proprietorship. Whenever someone having 100% ownership on his business, and he is the only a beneficiary, or they could have a couple of employees, right, who will be working for them, but they will be 100% owner. There won't be any other owner for that business. So whenever that kind of business, any person own, and when they need to file the tax return, this is the form. Schedule C will be filed by them, and they will be declaring all their income, profit, loss on this form. And as an underwriter, we are going to calculate, we are going to analyze this Schedule C form. So the very first line of this schedule is name of proprietor, right? So whoever the name, like if like say it's indigenous outlook, I am the owner of that entire indigenous business, right? So my name will be written like Sudesh Kumar will be written here. Then my SSN number, whoever the owner, right, that SSN number. Then principal business, or when it comes to principal business, it there in this line we are going to disclose what type of business this is. Like maybe if let's say indigenous outlook is a business regarding education, right? So I might write, okay, it's educational profession, right? Or it could be like marketing. It could be like someone may having kind of business where they have couple of cars, so they are utilizing or renting out those cars. So renting business could be here. So whatever the business owner is doing, that name of, or that profession, right? Then name, like we have an educational channel, right, or education business. We are providing educations, we are running a school, right? That is a profession. But the name of that school, what name of that shop, name of that car company, that kind of name, we are going to write the name of that business, whatever the name we have given to that, right? Now the next is line number B, that code from instruction. This is not relevant to us. And then employer ID, whoever will be having the license number or their tax number, that could be written here. Then business address, wherever I am doing that business, I need to write here in the complete address. Then there are few more lines, those like F, G, H, I, J. These are very self-explanatory. You can just go through by this form, and you can find it. You can just read out. These lines are not, we as an underwriter, as an analyst, we are not very much concerned about these lines. So I'm skipping or I'm just focusing on those lines which are relevant to us, right? Let's go to the part 1, and that is what it is. It is about the income. So the first or the header of this page or this Schedule C is about the information of business and the proprietor or the owner. The second part, or the part 1, is about income. So what if I have a business and gross receipt of sales? So whatever I sold, it could be like whatever the business I did, I sold in that. Maybe if I have a product and I'm selling that product, so what is the money that I received according to my receipts? So it could be like 100,000. Okay, let's say it's 100,000. That is the $100,000 that I sold. Then cost. What was the cost of that goods that I have sold? So the maybe it's 60,000. Let's say 60,000, right? And then gross profit. So what is the profit? My 100,000 I sold. The cost of what I sold was 60,000. So obviously 40,000 is going to be my profit, right? Now the other income. What is other income? There could be some other income, like maybe someone has received some refunds from somewhere, right? So that is again an income. So if there is any, that need to be right here. And now what is the gross income? If there is any income, that will be included in this gross profit, and that is what 40. As of now, in this scenario, it will be only 40,000, right? That is the total income. Gross income. Gross income means it includes all other expenses. So let's see what is the net income or net profit, right? Let's go to the part 2. Now we will be looking at the expense part. So what are the expense part? Like line number 8 to line number 27. Line number 8 to line number 27. These are all expenses. Those belongs to this business, right? There could be 2 expenses, there could be 10 expenses, or there could be all the lines or all the expenses or there could be all the expenses that have been written here, right? There are car and truck expenses, there could be some advertisement, there could be some taxes, there could be a different number of expenses, advertisement, there could be some paperwork, so lot of expenses, right? So it could be anything. But what I wanted to discuss with you, whenever we are looking at these expenses, we just need to focus on the line number 12. What does this line number 12 shows us? It tells that line depletion. Whatever the amount given to us on the depletion, right? Then that we can add back. So let's say it's given 5,000 depletion, right? Or depreciation. If they are saying that there is a depreciation of $10,000, right? And also the line number 24. Line number 24 is meals and entertainment expense. We all, make sure that whenever we are counting or we are, whenever we are calculating income from Schedule C, try to, take 50%, try to add, consider 50% of meals and entertainment again, because mostly it happens like, whenever someone is declaring any meals and entertainment here, that means they are only giving the meals and entertainment that has been, spent on someone else. But whatever they have spent, we can easily get to know that okay, there is the similar amount they must have paid for themselves as well. So we can we should consider whatever the amount written there. Let's say there is $500 written, then we should deduct 250 again. However, we need to check it. What is the policy of our client for whom we are working? If they instruct us to consider the entire amount, then we should consider it 100% like $500 again. But that does not make sense. We should only consider it as $250, 50% of that amount, and then we need to deduct that from their income. Okay, so why I'm considering line number 12 and 30? These are the add backs in the income. So let's see what we were doing. We had gross income on line number 7 as $40,000, right? $40,000, right? This is what we saw. Now we came to the expense column. We saw there is a 5,000, 5,000 and depletion, 10,000 and depreciation, $500 written in the 24, and maybe there are some other expenses line number 8, 9, 10, and then there are 20. Lot of expenses are written there in all these lines. So let's see total expenses. What is total expenses? 5, 10, and then 15,500. Then they may have written other expenses in other lines. That is total. Let's say 10,000. So 10,000 the other expenses, truck, car expenses, advertisement expenses. Maybe they have paid some fees, some wages to someone. So those kind of expenses. So let's assume that it is 10,000. So other expenses 10,000, depletion 5, depreciation 10, and meals and entertainment 500. So what we are going to do, all other expenses, total expense, other expenses 10,000 and 20, 25 and 25,500. So total expenses are given at line number 28 is 25,500. Let's assume these are the total expenses. So now what is the tentative profit? This is the gross income. These are the expenses. These are the expenses, right? Total expenses including depletion, everything, whatever I am telling you. These are the total expenses of 25,500. Now what we are going, they are going to write here 40,000 minus 2515 and then 500. So 40 total tentative profit is going to be $14,500. This is what the total after expenses. The amount tentatively they got was 14,500. But I'm telling you, we need to keep an eye on the line number 12 and 13. What they did, they, what are these amounts? Depletion and depreciation. Actually, these are not expenses, or this is why we assume that whenever we are going to file the taxes, we take some credit from the government. That okay, we should not be. These are the depreciation and depletion that happen to our business, and because of that we should not be charged for this amount. Maybe I'm using a machine and I say that this machine has depreciated than the previous year, and it has now less value of 10,000. So why should I get some credit while paying the taxes? So that is why I'm just taking a credit, but this is not the actual expense, right? This is not the true expense. This is just something hypothetical amount that I'm just assuming that this is what the depreciation has happened to my machines, to my business. So I should get some credit, I should get some benefit from the government, and I should not pay taxes, or I should pay less taxes, right? After deducting this amount from my total profit. But actually, as when we are calculating their income, we know it is income. It was not true expense. So we can add back both these in the income. So 10,500 tentatively, whenever we are going to, we are going to deduct all these expenses, tentative profit is only 14,500. But we can add back depletion and depreciation back into this amount. So it is almost $15,000, right? This always depreciation and depletion we can add back into their tentative profit. Now there is line number 30. What happens in this line number 30? In the line number 30, let's suppose someone is working from home. If I am working from home, then I am going to give this address in the part 1 or at the top of that. This is what my business address. Now if someone is getting credit to work from home, like let's suppose if I'm going outside, I'm renting a office there, and then I will be paying a rent, so that rent will become my expense. In that case there wouldn't be more profit. So, but since I am working from home, so I should also get some credit, or I can declare that yes, this is the amount that would have been spent outside, right? So I should get credit for that. So if I am using a space of my home for my business, I can get, or I can declare some expenses there as well. So if I have declared, let's say $5,000 here, right? So these 5,000 could also be added back into the total amount, because in this case 14,500, that is the tentative profit after reducing or after deducting all these expenses. Then they are telling that 5,000 is their expenses for the business, for using the house or their home for business purpose. So 5,000. So in this form, their net profit 40,000 minus total expenses 25,500. Their net profit is 14,500. Expenses for business use of home, again they declared 5,000. So after deducting 5,000 expense, the total profit they shown to the government, or and then they must have paid, that as an underwriter. When we are going to consider their income, what we are going to do, we are going to see at the gross income 40,000, then the total expenses 25,500, but out of these 25,500 we know that 5,000 depreciation 10,000 is not a real expense. It could be added back. So we are going to add back 5,000 and 10,000 into their tentative profits, which were 14,500, 10 and 5, 15,000. Total becomes 29,500. For us, their total income is going to be 29,225, and then that is the net profit for us. So we can divide $29,250 by 12, and whatever the amount, that will be our income, right? That will be our monthly income for borrower. But if we are going through this, we are going to consider only the net profit that they have given. It will only be 9,000. In that case, it could be even 1,000 per month. But when we actually calculating and adding back all these expenses, it is almost more than $2,000 per month. Total $29,250, right? I hope that our schedule C is clear to you. If you still have any doubt, let me know, and I will try to clarify that as well. But let's go to the next schedule, and that is schedule